Investors may choose to invest into higher yielding ETFs for a variety of reasons, including the potential for higher returns on their investments. Now, a lot of dividend and income investors are very intrigued by higher yielding ETFs. Some of the ETFs like JEPI, QYield, and JEPQ are designed to provide higher yields than others by investing into higher yielding assets and using options on top of that. Now, these funds may be attractive to investors who are seeking income from their investments and not so much long-term capital appreciation. Now, if you happen to be a dividend investor or an income investor that is intrigued or even already invested into some of these higher yielding instruments, stick around until the end of this video because we are going to go over one of the higher yielding, higher quality, income-oriented ETF known as JEPQ and see how long it would take to turn $10,000 into over $1 million, along with some massive dividend income. So JP Morgan Asset Management launched the firm's first ETF to invest primarily in the equity securities of large cap companies listed on the Nasdaq market. And this ETF is known as JEPQ, ticker symbol JEPQ. Now, this fund is an active equity ETF that seeks to deliver an attractive distributable yield while also delivering a significant portion of returns associated with the fund's primary benchmark, the Nasdaq 100 index, with less volatility according to a statement from the JP Morgan firm. So unlike a lot of the other higher yielding income-oriented funds out there, like QYield or even JEPI, JEPQ seeks to distribute large dividends but also seeks significant capital appreciation on top of that. JP Morgan also said that JEPQ was built for investors that are seeking income while also owning companies that provide exposure to the Nasdaq innovative marketplace. JEPQ comprises a portfolio of equity securities of large cap companies included in the Nasdaq 100 index and will incorporate an option strategy to generate income while also lowering the volatility of the overall portfolio. And some of the names here are very familiar. And we are going to go through the exact top 10 holdings of JEPQ in a second here. Now, also according to the firm, this management style of JEPQ aims to deliver returns, offer incremental income, and better manage risk within portfolios as investors navigate today's rising rates and inflationary environments. Now, it's no secret that during the last year or so, the market has been very, very tough to play right. But with a fund like JEPQ, it might be a safe haven where investors can receive incremental dividend income and on top of that, manage risk with the help of options. Now, looking into JEPQ's current dividend yield, the trailing 12-month dividend yield, according to seekingalpha.com, is 12.49%, which is obviously a much higher dividend yield than you're going to get from pretty much any stock and even most income-oriented ETFs. The annual payout trailing 12 months is $5.66, which is again very, very high. This fund pays a dividend on a monthly frequency. And although there's not all that much dividend history as of this time because JEPQ is relatively new, the dividend payouts have been relatively stable, paying somewhere around 45 to 50 cents if you were to average out the last 10 or so payments. Now, one of my favorite ways to really assess how a stock or ETF is actually doing is to chart it out with a total return metric, which means dividends and price included, and stick it next to the S&P 500 as a benchmark. So unfortunately for us, since JEPQ has only been around just over 100 days, there's not really all that much data and information we can get by doing this. But regardless, if we stack JEPQ next to the S&P 500 and look at the year-to-date time frame, JEPQ has returned a total return of 15.53%, where the S&P has returned an 8.11%. And again, take it with a grain of salt because JEPQ hasn't been around all that long. So to get a true idea of how it stacks up next to the S&P 500, we're going to need a lot longer to see what happens. Now, some more quick facts about JEPQ. The expense ratio is 0.35%, which is obviously a lot higher than something like SCHD, but is sort of in line with most of the covered call or income-oriented ETFs. The dividend frequency is once again monthly, and the assets under management is $2.41 billion. So although it's not the biggest covered call fund out there, it has been growing consistently since inception. Next, looking at the top 10 holdings for JEPQ, a lot of these names should be familiar to everyone. The top 10 holdings are Microsoft, Apple, Alphabet, Amazon, Nvidia, Meta, Tesla, Cisco, the US dollar, and Comcast. So now that we went over some of the basics when it comes to the JEPQ ETF, let's go ahead and input everything into the dividend calculator and see how much an initial $10,000 investment into JEPQ would turn into by retirement time in around 30 years from now. So as far as all the inputs for JEPQ, we used a monthly distribution because it pays monthly. Dividend reinvestment is turned on, which means all the dividends will be reinvested to buy more shares of JEPQ in the future. The starting balance is $10,000 and the annual contribution is going to be $12,000, which means this investor in theory would buy an extra $250 per week of JEPQ. The initial annual dividend yield, we're going to go off of Seeking Alpha's trailing 12 months at a 12.49%, which again is much higher than many other instruments you're going to find. And the years invested, we're going to go with 30. So now that it's all calculated, let's go through and see what we got. The first year, the principal would be $10,000 because that's the initial invested amount. And already off that $10,000 investment, these shares of JEPQ would already be paying this investor $1,323. Now again, when you're investing into a higher yielding instrument, something like a covered call ETF like JEPQ, JEPI, or others, the cool thing about it, obviously, the upside is that you are going to see massive dividends pretty much from day one because of the huge initial starting dividend yield. Where on the other hand, most dividend growth investors would need to be invested for many, many years to see this level of dividends in their portfolio. By year number 2, with the reinvested dividends plus the $12,000, this portfolio would be at a $23,000 balance with over $3,000 in annual dividends. By year number 3, $37,000 in principal now, with $4,900 in annual dividends. Next, by year number 4, this investor would have $53,000 already, with over $7,000 in annual dividends. By year number 6, this investor would have $92,000 in principal and already have over $1,000 per month being paid out in the form of dividends. Skipping a ways down, by year number 10, this portfolio in theory would be at $197,000, with over $26,000 in annual dividend income. By year number 15, $412,000, with over $54,000 in annual dividend income. By year number 20, $777,000 with over $100,000 in annual dividend income. Now at this point, I'm sure you guys can all see that as the numbers get bigger and as time goes on, the snowball continues to grow faster and faster. And don't worry, it's going to only continue to do so more and more. By year number 23, this investor would have over $1 million worth of JEPQ at $1.110 million and $146,000 in annual dividend income. Skipping all the way down to the bottom, this investor, in theory, would end with $2.459 million with over $325,000 in annual dividend income. Now, I don't know about you, but $300,000 plus of dividend income annually could probably cover pretty much anything you would need during retirement. So there we have it. There is the exact math of what an investor could see in theory if they invested a starting amount of $10,000 into something like JEPQ and just kept reinvesting and reinvesting all the way until retirement. Comment down below if JEPQ is something that you would personally buy for your portfolio, and let me know what you honestly think of it. If you guys enjoyed this video and you want to see more videos like this, make sure to please drop a like in the video and subscribe to my channel for more. Thanks as always, guys, and I'll see you in the next one.